Hello, this is Tom Clabb with a Precious Metals Market Update. This week is a very important week, and not only for gold and silver, but for stocks and bonds and securitized debt worldwide. We start the week off on Tuesday and Wednesday, as you watch this, with the Federal Reserve meeting, and almost certainly there'll be over a 90% chance they'll raise rates 0.25%. It doesn't sound like much, but it's about $30-something million a year in interest put on our debt that is in there, and that's the second increase in 8 years, and they're talking about possibly more later in the year. But also, beside the 14th and 15th for the Federal Reserve meeting, we have the 15th, we have the Dutch election. There's been a lot talked about, and even NBC last night ran a 3 or 4 minute spot about the candidate, and he's wanted immigration vetted similar to what Trump wants, and he wants to get out of the European Union, which has 28 members, and he's really a pro-Trump candidate. So he could win on Wednesday, and it could start things rolling very differently than the world you're looking at today. And then just think, on April 23rd, just 5 weeks later, we have the French election. And what an election that is. The person that was a shoo-in to win ended up getting into a controversy about hiring his wife and his 2 children and putting them on the payroll. The next thing you knew, he's out. So that's the Republican Party. And because you have the Republicans and the Socialists are the 2 main parties, but you have smaller parties. So now, in the news, you hear Marine Le Pen, the female, running against 4 males in there, and almost everybody thinks she's come from nowhere to second, and is still like 7 or 8 points behind the guy that they're expecting to win. But we've seen miracles with the Trump, and what we could see again, because every day she seems to be gaining momentum. And we know the world bankers don't want anything to do with her going in, because certainly if she went in, France would probably leave the 28-member European Union, and they would also pull their currency out of the euro and go back to the French franc. So there are some big things out there, but the thing that nobody talks about in the last few days is the 100 days of Trump, and he was going to go out there and do all these things, and certainly he's trying, but we now are announced the tax cuts are not going to happen. They're not going to review them until after the summer break. So they're taking a 90-day deal and kicking it down another 90 days and may not even do it then. The odds are about even that we'll see any tax relief this year. The main engine that's driven the stock market up to 29 times earnings never seen in American history. And people say, oh, it's going to keep going. Well, it's your money. You risk it. I'm not saying it's not. But for me and my family, we will cut back and take the profits we made off the nice jump since Trump got elected, because I do feel there will be a pullback. But now you can't base that anymore with no tax relief for corporate or individual here in the first 100 days of Trump's presidency. Now we come to, I had a question the other day about, they had seen a slide that showed that all the gold ever mined in the history of the world would fit under the base of the Eiffel Tower, and that it was only 66 square feet in diameter each way. And the answer to that is yes, that is true, and that's been verified by many mathematical people as well. So you're talking about all the gold in the history of the world ever put out there, and it's 66 feet cubed. So you're talking about it'll still fit on the base of the Eiffel Tower before it even gets to where the elevators start up. So that is a true rarity, and certainly we've seen gold and silver cool a little bit here, waiting on the interest rate increase from the Fed and to see what's happening in the elections. But the other thing you're ignoring is the inflation rate. We've gone from a 0.02% only 2 years ago to where the last 2 months we're running at 2.7%. So it's gone up like 13 times, and nobody's talking about it. Interest rates are going up. Money's being created. We're hitting a $20 trillion debt, and that is the most important issue of today. On Wednesday, after 2 years of letting Obama raise the interest rate on his own to where there wouldn't be a debate and it wouldn't be a problem with the American public, Obama just upped the $2 trillion the last 2 years. Now, on Wednesday this week, March 15th again, it is when they expire and the debt has to be dealt with again. There are strong beliefs out there that Trump's going to ask for $2 trillion. Obama never asked for more than $1 trillion. He wants $2 trillion. He wants to do infrastructure, spending $100 billion, $50 billion for military, $40 billion for VA. And as this goes up, it's going to push the interest rate up and start consuming the compounding effect that's got us where we are already. Because right now we're paying between $300 and $400 billion on a $20 trillion debt based on a 1.43% average when you take the bonds and the notes into consideration. We're paying about 1.4% on $20 trillion. So you can see if it goes up a quarter, it's about $30 million more of debt. But if this thing gets into a Donnybrook like it did in 2011, and you know the Republicans are going to pay for what they did to the Democrats, and the Democrats are going to try to shut the government down for a few days to make their point, which is politically positive for them in the future. And of course, what you don't remember in 2011 is we saw gold go up $300 or $400, get up to $1,800, and silver get up to $45 when all that was being debated after the drop in 2008 and 9. So be ready and aware, and certainly I would increase my position in gold and silver some as quickly as possible. I'm not going to tell you it's going to run away, but all these dots are out there. They may come together, they may not, but certainly you got to be aware of the stock market. You got to be aware of the real estate market is back to its 2008 all-time highs. So you've got a bubble there. You've got a bubble in the stock market at 29 times earnings. You've got the bond market selling off securitized debt with hardly any liquidity. Nobody's bidding on these things. So you're going to have the Federal Reserve continuing to create money, and Trump wanting to raise the ceiling $2 trillion, not $1 trillion, like Obama averaged over 8 years. So there's a lot out there, but we are seeing large purchases in our foreign accounts. We're seeing sovereign central banks. They're buying. We don't know which ones. They don't tell you till later. But it looks like right now the money is flooding in, and yet all you're hearing is gold and silver are at a risk of going down. But that's because these sovereign accounts want to buy more gold and more silver. And then, of course, lastly, there's a lot of stuff out there about gold being fixed at a higher rate, and Trump's one of his economists and others have been involved in talks in Europe. And don't be surprised to see one day you wake up and gold's adjusted from $1,200, $1,250 to $3,000, $4,000, $6,000. It certainly is not out of the realm with all the talk about it, and certainly you just can't create money forever. We can't go to $40 trillion. We can't double the debt again in 8 years. There's no possible way. You would have hyperinflation, which would be incredible for metals. So anyway, think about all this. If you'd like to talk to myself or Dan or Kathleen in my office, you can reach us at 800-247-2812. That's 800-247-2812. And we can talk about what we talked about just now, a self-directed precious metals IRA for gold and silver bullion. We'll show you how to set that up. We can act as your broker, and we will talk about what percentage gold and silver you want in each one. So we're certainly there to help you in any way we can. We also feel rare coins, if you're still holding those, you should get out of them, because we do expect, as it has been for 17 years, that gold and silver bullion are going to outperform rare coins by a substantial amount. There'll be people out there that argue, well, that's been true for 17 years, but it doesn't mean it's true in the future. But they're telling you that because they want to charge you big markups. And the closing remark is this: we have the lowest storage rates in the world because we charge no markup. We charge you exactly what we are charged through negotiations. So we can arrange for you to store your metals if you don't want to take possession in IDS Delaware, IDS Toronto, Canada, that's International Depository Services, Cayman Islands, SWP, Strategic Wealth Preservation, or over with Malik in Singapore, or lastly at NZ Vault in Wellington, New Zealand. So we have 5 storage facilities that we can help you arrange to put it there, and we ship it there free to all of them except New Zealand. You would have to pay for that. But the rest of them, we'll put them there for you. You'll have to choose between things we already have there. We've started moving, wholesalers we deal with started moving larger amounts of inventory to these locations except for New Zealand. So hopefully we've given you an up-to-date update. If you're reading Steve's things on gold and silver and oil, you're in the loop of one of the few in the world that knows what's going on. And all we urge you to do, if you saw Steve's graph a few weeks ago, is only 1% of the $369 trillion of investments at the end of 2015 are in gold and silver, and they were at 4% in 1980. And if we see it go back to 4% through falling bond prices, stock prices, and rising metal prices, you're going to see gold and silver worth several times what they are today. With this month's Precious Metals Market Update, this is Tom Cloud signing out.